Coming in this show, my commentary on the financial markets and a look at some warnings from the transportation stocks. We'll look at a preview of a member video in our stock sector section, the mega cap stocks, and Arby takes a deep look at Apple and Tesla. And then I'm going to bring you the stock market short-term view and give you the important correction levels that, if broken, set up some trouble for the stock market.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone riding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go AskSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the AskSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had a choppier week as investors started to get the message that the concept of QE infinity may be a falsehood. Still, on the week, the market saw small gains as buyers keep coming back. Monday, the markets were closed for the holiday, and Tuesday, there was early selling as oil reversed to the downside on worries over an OPEC agreement. ISM came out weaker, much weaker than expected, but costs were up, and that signals stagflation ahead. Stocks didn't like that news, and they moved down pretty sharply on Tuesday. Money moved on that day strongly to the bond market, and that may be really the story of the week, as the 10-year yields fell below 1.27%. But in the stock market, the buy-the-dippers keep coming in. The S&P on Tuesday, which was down 38 points at the low, actually finished only about 15 points lower on the day. Wednesday was volatile again. Early on, oils got absolutely slammed as the report out of OPEC was that UAE may be winning that battle and that there may be more supply coming from other producing countries. But buyers came in expecting something out of the FOMC minutes that would lift stocks. And they, as usual on that day, were able to do that. The S&P, which had been down 22 points, rallied and finished up about 10 points. The background chatter was really about tapering in the FOMC minutes. And that seemed to have the buyers a little upset, but they actually didn't really react to that until Thursday. Other comments out of the FOMC was inflation came stronger and faster than they had estimated. And the underlying message in that was they have no idea. Remember that these minutes that came out were from the meeting before, and that's several weeks ago, and the chaos that actually hit the repo market hadn't happened yet. So that actually caused some big moves in yields that we were seeing this week. Thursday, there was a big early drop. Worldwide markets fell pretty hard, and there was a further crackdown in China on the tech stocks, is they have efforts to increase security about their data. And many U.S. indexes delisted Chinese stocks, and they really got smacked in there. Didi stock, which was a new IPO, has gotten absolutely hammered since that IPO, and several other IPOs, Chinese IPOs, were pulled. U.S. ADRs from China, like BABA, that fell 30 points in 7 days. That was a 14% drop, and Baidu had a similar reaction. So those Chinese stocks really got hit, the Chinese market, and that negatively affected the market also. So big early drops that we saw on Thursday were looking really ugly at that point. And, at that point, they also did realize that, the Fed, they were talking about tapering. And at least to the point where they're talking about tapering, or they may be beyond that. And that was a big factor which really got the markets moving to the downside. Another thing that hit the market on Thursday was the railroads. They got hit very, very hard, leading the transportation index to the downside. President Biden said he would address anti-competitive policies of the coming from the railroads. And the Dow Jones Transports fell 3.3%. That was a 500-point decline on top of what was already a very weak market for the transportation index. I've got more to say about that. But at the worst levels on Thursday, the S&P 500 was down 80 points. Really looked like a lot of trouble. Then again, the buy the dippers came in. The S&Ps rallied to only down about 30 and ended the day down about 38. But some pretty good damage was done. Friday, there was a rebound in the Chinese stocks. The bonds pulled back from their panic buying that was coming into the treasuries this week. And stock buyers, they came on early. And the stock market continued to move to the upside now through midday when we're doing this show. Railroads also rebounded as they seemed less, it seemed less of a threat that President was going to target the railroads, and maybe more talking about any coming mergers that would come from the larger railroad companies. So they got a big rebound. The tech stocks, which seem to be maybe stalling a little bit, are lagging the upside move here on Friday, but not by all that much. We still have them moving to the upside with the NASDAQ up nearly 100 points. While the S&P 500 is up over 40 points right now. So the market here strong on Friday, and that was a really good rebound that we saw this week. So while there's much choppier action going on this week, there was really only minimal damage in certain areas done to the market. There is a lot of chatter right now around technicians about Dow Theory, short-term Dow Theory sell signal. That happens when you get rallies where there's a non-confirming index. You go down and make a correction, and they confirm on the downside. Now the Dow is moving up to the high, so the question whether or not you have a real Dow Theory sell signal or not. You really wouldn't have it unless they both move down to correction lows, in my opinion. New traders, new investors, new analysts, they laugh at this old style analysis anyway. They think that there's only one direction, and that direction is up. And it is true that it's much more of a service economy than we ever had, and maybe the transports, they're not as important as they used to be. We're going to look at some things in here, but when I look at analysis like Dow Theory or poo-poo the action in the cryptocurrencies, then these younger people involved in the market, they're all over me. They call me a boomer. Yeah, boomer is now a swear word. So what that essentially means that anybody that uses any kind of old analysis, anything that might be talking about the markets ever moving down, then we don't know what we're talking about, because this is a new world economy. Things only go up. At least they believe that. We're going to look at some charts in here, and even if the Dow Theory doesn't make any sense, some of this will make sense to you as we look at this. This is the AskSlim momentum indicators that we're looking at. The top chart is the slim ribbon shown in an area chart. And on the bottom, you can see there is a slim ribbon PO. That is a signal line for momentum conditions. So this is the Dow Jones Industrial Average, which had some minimal correction. And that red area that you see in there is where both the Dow Transports and the Dow Jones Industrials had a correction and essentially got lower than that low right there. So that's what got them thinking it was a short-term signal. But now you're back up to the all-time high here in the Dow Jones Industrial Average. What's important to look at in here is that overall, going all the way back here to January, mostly you had conditions that were positive or neutral in the Dow Jones Industrial Average. And when they came down and had this correction, it moved back up to positive momentum. You can see in here the AskSlim PO signals. We're giving you these positive signals. And when this is green, conditions are positive, and the market is likely to be moving to the upside. So you can see here the Dow Jones Industrial Average, and take a good mental picture of this because I'm going to show you the transportation average in a second. So you can see in here momentum, basically reestablished to the upside, very, very strong conditions. So here is the non-confirmation of what this looks like looking at the transport. So while the Dow Jones Industrial Average is at the all-time high, the Dow Jones Transportation Average down about 9% right now. It was down closer to 11%. So it was a pretty significant move in there. And as you can see, just as we showed you in the Dow Jones Industrial Average, all of this strength in here that you saw with positive momentum confirming to the upside, and all of our positive signals that you saw in here, which were great and very strong, as both of these indexes moved up together. Now you have a very different condition in here, where the Dow Jones Transportation Average, now with over a 10% correction, are giving these negative signals, and a long way from coming to any positive momentum condition in here in the Dow Jones Transportation Average. So as you can see, whether it's Dow Theory or not, the transports are pretty weak. And what that used to mean is that the mechanism that moves product all over the country, it is weakening, and that seemed to be signals for conditions weakening and a potential for the stock market to go into a correction. But is that actually a real signal or not? I want to take a look at something else in here. So while we already have this correction and it was already down 10% in the transports, what really does that mean to the bigger picture of the stock market? Let's take a look at a chart that looks at the last 14 years. This last bull market that we're in, of course, is from 09. This chart is going to look back in here to 07. Because I want you to see the top of the bear market in here. So what we're looking at now is a weakness in the transports, and what we get is a negative signal. This is the monthly S&P 500 versus the Dow Jones and Transportation Average, SPX versus the DJT. And when the transports turn down in advance of the broad market, it really leads every correction in here of the last 14 years, including the beginning of the bear market. So what am I looking at here? Well, I'm looking at periods where the transportation had a decline, and that's the line that you see there, and the candlestick is the S&P 500, where it had a pretty sizable correction, 10% or more, ahead of where the market actually peaked. You can see in here back in 07, where the stock market peak came, that the transportation average was already moving down well in advance of the peak that came in the stock market. And that actually was a bear market of 57%. If you look here at the correction, that was about 21% in the stock market back in 2011. This was the time of the Euro crisis. The transportation average, as you can see, peaked about a month or two ahead of the stock market's overall peak that gave you that 21%. Here you could see the transportation average back in before this, really a mini bear that was going on right over here into 2016. It actually fell 16% and 15 and 16% a couple of times. You can see that the transports peaked well in advance and had pretty sizable declines, while the stock market just moved sideways before it had this double dip on the downside of about 15-16%. Each one of those. Take a look here at the taper tantrum right at this point. It's pretty similar to what we're seeing right now, because there is talk about QE being reduced or ended, and the necessity for that based on the Fed putting excess liquidity, massive excess liquidity, into the economy. Here you could see the peak right over there in the Dow Jones Transportation Average was about a month ahead of the peak in the overall stock market that fell 20%. Here you'll notice the peak right over there was about 2 months in advance of the overall decline, the COVID panic, the pandemic panic here of 35%. But the transports were moving down already, so maybe it was a correction ready to happen. We were at this point looking for a correction to come starting a couple of months later, but the pandemic moved it down faster. And look where we are right now. The transportation average was down almost 11%. A little bit of a bounce back that we're getting in there. But 2 months later, where we are right now, we have the peak in the S&P 500 and the NASDAQ and the Dow equaling those peaks. But the transportation average weak. And you can see that. Each time of these corrections, and each time the transports had some 10% or greater declines in there, that set up what was coming, which was a correction in the market. This is 14 years, and it's back about 12 years from that bear market low right over there, and the transports were a very, very good indication that a correction was coming. So yes, they led the market in that case, and I think there's some strong message when you look at that. Maybe looking at the Dow Jones Transportation Average is old economy analysis, boomer analysis, as they would say. Well, I just showed it to you. I think it's significant. Ignore it at your peril. For the week, the stock market, the major indexes, S&P 500, the NASDAQ, the Dow, at this point, they are fractionally higher, just a little bit after being pretty significantly lower. And the Russell still to the downside, about 1.5 to 1.75%. And for the week, it was just seemingly a lot of noise. But maybe that bond market action is important, and I've made mention to this in our Future Speak show, which I think is important for you to watch, level 2, 3, and 4 members. The money is moving into the bond market, still with a pullback in bonds today or a pop in yields. The 30 years are up about 1.75 points. A lot of buying came in. The 10 years still down about 8 basis points. Trading at about 1.35% for the 10-year. It was down to 1.27%. And you can add that to a previous week decline of about 8 or 9 basis points. So money is moving into bonds, into the biggest market in the whole world. And when money flows into bonds, it's got to come from somewhere. It may actually be coming from stocks. And again, the breadth in the market in the advance is very weak. Gold actually stayed firm, silver weaker. Gold market puts on about a 20% gain, but the silver market was down 37 cents. So it was definitely a weaker market for silver. The dollar, which had a kind of a safety bit, also money moving into it, came down here a bit at the end of the week, and it's about unchanged on the week. And oil market, it's up about $1.65 on Friday. It's still down about 60 cents for the week. It was down over $4 as OPEC Plus argues over the production levels. They still don't have any meaningful agreement. The UAE does not want to be pushed around, and they need the money with all the production. And historically, that means oil prices are going to fall. So I think that the strength that we see is a rebound at the end of the week. I think all of this chop that we've seen in there and lower prices overall is the setup for a peak in the oil market. Coming up, we're going to look at stock sectors, and RV is going to do a deep dive into Apple and Tesla as a preview to our member video, Stock Sectors. And then I'm going to bring you a short-term view of the S&P 500, the SPX, and the NASDAQ. And I'm going to bring some very key levels that I think are important based on the action we saw this week. So you're going to want to see that. If you are new to AskSlim, please do go to the website and explore that website. You could become a free member. You could become a level 1 member when you're just trying to get an idea of what we do. If you're watching this on YouTube, please do subscribe to the channel. Click the notification bell so you know when we put up videos. And make sure you give a thumbs up to this video. When you like the video, well, then it does help us. Follow us on Twitter at AskSlim, and if you have questions about our memberships, anything about what's included in there, or anything around how do you get around the website, you can write that to Brian at AskSlim.com. Brian is our administrative lead, and I think he's going to do a great job for you. So Brian at AskSlim.com for membership info. Coming now is a preview video where you're going to see our cycle analysis on mega cap stocks. Avi does a phenomenal job. He puts up educational training videos every single day for our trade ideas, and we put up trade ideas every single day also for level 3 and 4 members. So you're going to see his amazing skill and knowledge when you look at this video on Apple and Tesla, two very, very key mega cap stocks. And in the main video, he looks at 10 stocks. So this is just a little peek.
So this is the weekly cycle chart for Apple. For Apple, we have a dominant weekly cycle here in black, which is then broken up into these minor half cycles. What that means is that we see a dominant money flow pattern, which is further broken up into these minor money flow patterns. And our job as cycle analysts is to interpret these patterns and then come up with a sum of the evidence. So what we see here is that we formed our bottom back in March of last year with two cycles pushing up, with the dominant cycle pushing up as well as the minor cycle pushing up. This is a very positive time period where you look for nice rallies on the upside, and you can see the really nice rally we've had here in Apple. After that, we had a pullback right here to form the mid-cycle low, and given the very bullish configuration in our weekly momentum, you can see that only led to a very minor pullback on the downside, and we very quickly moved to new swing highs as we got into the rising phase on this minor cycle. After that, you can see we rallied further up here and then got a sharp sell-off right here where we had our dominant cycle, which was very late in the cycle. When you get very late in the cycle, that carries risk on the downside. So we had our dominant cycle pushing down as well as the minor cycle, which was also very late. So this period of time here in the later stages of cycles is where there is risk on the downside. And you can see the really nice sell-off that we had from around 138 to around 102 or so. After that, we got into a rising phase once more with the dominant cycle in a rising phase as well as the minor cycle. And you can see the rally we had here. Then we had a very minor pullback right here to form the mid-cycle low, and then the rally off of the mid-cycle low, and then once more a large sell-off right here where we had the dominant cycle pushing down as well as the minor cycle pushing down. What's going on now is that we are in this rising phase on the dominant cycle. You can see the rally we had. Then we had a pullback right here to form the mid-cycle low and the rally off of the mid-cycle low, and that's really where we are now, is that we are late in this dominant cycle, which is a period of time where there is heightened risk on the downside. And we are also late in our minor cycle, and we are looking for the next corrective period here with the dominant cycle to start to push down as well as the minor cycle pushing down. So far, there is no sign of it, as Apple is almost pushing to new all-time highs here with the prior all-time high at 145.09 and with Apple trading around 144 or so right now. On the upside, we have an intermediate 127.2 fib at 149 or so. That is really what we're looking for in the short term in Apple prior to getting some selling back on the downside. Now, given that we would likely see a cycle high that was higher than the prior cycle high, along with a cycle low that would be higher than the prior cycle low, this is what we would call a positive cycle. When you have a positive cycle, you would look for new swing highs in the next cycle. So that's really what we're looking at. So watch for a bull flag to form here, and then for this to turn back up and make a new swing high out into the fall of this year. The next key low is due 8.9 to 9.13. If we go ahead and shift over to the daily chart, you can see our daily cycles here in Apple with a dominant daily, which is then broken up into the minor half cycles. And we are forming what we would call a swamped cycle, where the underlying basically rallies for the whole cycle. And this is a very bullish setup here where you look for just a very minor pullback prior to a push to new swing highs in the following cycle. So what that looks like here is just a little bit of a bull flag and then one more push back up to form a new swing high in that next cycle. You can see we also have very bullish daily momentum here as well, with our slim ribbon and reversal scout both positively configured here. So all of this is really still lining up very positively here in Apple. The next key daily low is due 7.8 to 720, so that leaves a couple of weeks of possible risk on the downside. But as I mentioned, given the overall bullish daily cycle configuration here, we will look for new swing highs back in the next cycle prior to some risk setting in here. So what that really looks like is sometime out in the later part of July is where there would be heightened risk on the downside here in Apple, and that does also line up with the earnings, which it looks like are coming up near the end of the month. So this is Tesla, and you can see the meteoric rise here in Tesla that we've all seen over the past many years here. We had this large sell-off right here to form the key intermediate term bottom, got into this rising phase, and actually formed an early high in this cycle and are in this corrective period on the dominant cycle. Now, let's go ahead and look at this minor cycle. So you can see the key low formed here, and then we got a rally off of that mid-cycle low, and we are now late in this minor cycle and then late in the dominant cycle. This is a period of time where there is heightened risk on the downside, and we would look for one more pushback on the downside to form this next key intermediate term bottom. The next key low is due 719 to 96. If we look at the daily chart, we have our daily cycles here in Tesla, and we are getting late in this daily cycle that I've drawn in on this chart here, and we're looking for further movement here on the downside, likely down to this short-term 78.6, which comes in at 615, and that's with Tesla trading around 645 or so. So that's the overall picture here in Tesla. What we will look at is, and then one more rally in this next rising phase, and then a swift failure back on the downside. So that's really the overall picture here in Tesla.
For you. Coming up, I'm going to give you my stock market analysis, but first, watch this. Don't scroll forward. We have a deal for you that you just can't pass. We are announcing that the special level 3 trial is available right now. This is for first-time subscribers and upgrades. If you're a level 1 or level 2 on our site, you can upgrade and get these specials. You're going to get unbelievable pricing, and you have to beat this price before the increase that we're going to have. We are raising our prices because our development that we're going into have done and coming is just amazing, and there are costs to that, and we are expanding our offerings constantly. We're going to bring you for level 3 the Slimulator ranking system. I'm going to show you what that looks like. 84 best symbols with cycle analysis, momentum analysis, bias conditions, and more. Our trade ideas, we do one new one every day with an amazing instructional video, and great results we've had in that. Level 4 custom chart requests, you're going to be able to see, and you can see now, the archive. And there are many of those that go up every week that our level 4 members request, and you'll be able to see those charts in static form and see that amazing analysis. You will get our chart streams. These are live multiple time frame charts with our proprietary indicators on there. 4 time frames that it looks at. I'll show you what that looks like also. And you will be invited to our exclusive live webinars where you can bring your general questions on trading issues, trade planning, chart analysis, all of that included. Let's look at what this looks like in here. This is the Slimulator ranking system of the 84 best symbols. You get amazing things in here. You're going to get our directional bias, which essentially is an algorithm built out of all of these multiple time frames that you see in here. These are all sortable when you look at that. And you're going to get our outlook for the next 3 to 6 weeks, which shows you what the conditions are. In the case of Boeing in here, technical analysis is mixed and it favors awaiting further market messages. It is slightly bullish. If you look over here at Costco, it says that we have positive conditions and it favors alongside bias. And then our charts are available here with all of our analysis in there. And there is more when you dig deeper inside of this. The next thing you'll be able to see is our key levels in there, where we tell you what our key support low level is right over there and what the breakout level would be, and this one was confirmed on the upside. So we share key levels with you in there, and what we also share with you is our cycle low date. So in other words, if the market is likely to correct, what the time frames are that you're likely to see in the dominant or minor cycles on the weekly and on the daily. So you get our key dates in there. So you'll be able to look at the charts. You'll be able to scroll through the symbols and see which are the strongest and weakness, and even get our option bias indicator in there, which I think is just a fantastic indicator. So all of that in our Slimulator ranking system. The trade ideas, which come out every day, or just about every day. This is an example of what a trade idea looks like, and you can see in here MGM. This is presently inactive, so we're showing you an older one as an example. This is a long bias there, and it was a short-term trade setup, and we were looking for a reversal at the cycle timing. That's the type of trade that it was. Favorable entry range, the projected range, and the reevaluation level. Where is this trade no longer meeting our analysis, where we will pull it and say, you know, it no longer, it looks like a good setup. So this is great. And we give you the technical briefing in here of what really we're looking at. But if that isn't enough and it doesn't make sense to you, what's going to happen is you're going to be able to get the trade idea and you'll be able to watch it. Arvi teaches you around every single one of these. Shows you the charts. You'll get those. You're going to get the charts included with cycle analysis, support resistance, projections, momentum, proprietary indicators on there, and Arvi's amazing instructional video on every trading idea. You're going to learn cycle analysis from the world's experts on our site right over here, and Arvi does just an amazing job on that for trade ideas. And you're going to also get, and this just doesn't stop, our chart streams. These are live AskSlim charts with our proprietary indicators on multiple time frames for all styles of trading and investment. There right now are 7 streams that we have. There are more coming. SPX, NDX, Russell, SPY, QQQ, IWM, and GLD. And these are our indicators. You don't need a special platform. You just click on the site on the window and then click on that play right over there, and you have the live charts running for you with our weekly, daily, our 2-hour, and our 15-minute analysis on there and proprietary indicators. You can see in that where you have a 2-hour upward trend in here that's very clear, and these momentum signals telling you to the long side. Well, that says when the 15-minute gets to support, it's likely to be moving up again. So you get a good example of that. Daily chart strong, 2-hour chart strong, weekly chart strong. All of that as you're looking at the NASDAQ right over there. Just amazing when on these chart streams, and more of those coming. You're going to get everything there that I showed you, plus you're going to get everything in levels 1 and 2. The SIR daily snapshot, which is great deep short-term analysis on the indexes daily. The SIR daily intraday live grid, which gives you 15-minute charts with support, resistance, acceleration zones, the reversal scout on the S&P 500, NASDAQ, and the Russell. You're going to get our weekly Future Speak show. I take this deep dive into 24 futures, and I really do a tremendous amount of teaching in there on futures and the indexes. Our complete library, over 500 videos, 10 categories, many put in there weekly. Slimulator Momentum Tracker, this is for longer term holdings, over 1,000 symbols, multiple time frame algorithms that are built into that, give you the condition for 3 to 6 month outlook. Our weekly Spider Select ETF report, our trade planning worksheets that we offer you where you can organize, prioritize, save, and track your own analysis. All of that, can you imagine? Last call on the special beat the price increase. We're going to give you 1/3 off on the 3 months. That's $200, $200.25. That's $66.75 a month for all of that instead of $99 a month. So you're going to get 1/3 off, and it is an amazing deal. Prices are going up. It is time for you to get in on this right now. You will be grandfathered in. In other words, there will be no price increase, not for you. If you sign up, not for any of our current members. The prices are not going up for you. You will be grandfathered in. It would be only for new members on the, later in July when we raise these prices. So go to AskSlim.com, click on the link at the top of the main page for the special offer. If you want more info on that, on the specials for all levels, it is last call before all of those price increases. And you can write Matt at AskSlim.com if you have any trouble signing up or you have any questions. This amazing offer is only going to be here for a very brief period of time. Please do take advantage of that. Raise your probability of success in the markets. We always say, your success is our success. Stock market, S&P 500 and NASDAQ short-term view. And is the NASDAQ stalling? We want to just take a little look at the abandoned baby that's in there and see if that has some meaning when we look at this. So let's take a look as we switch over to the chart, the short-term chart of the stock market. This is the S&P 500, and what you're looking at is cycle analysis. And this is actually pretty advanced cycle analysis because we put in what we call complex structures. What we're focusing in on is a minor cycle right over here and a dominant cycle right in here that you can see. The dominant cycle made up of 2 minor cycles. The minor cycles have been mostly very consistent. You can see in here that where that low came, it was 16 days off of this low. This low was 15 days. This low was very, very short and did fool us at 11 days. Now we have the rally in here, and we're at a 14-day low and moving up again to another all-time high. So these buy the dippers, they come in. Now, there's some important information in here when we look at it. You know, I've talked a lot about market tops and corrections coming and those things. But the important thing when you're a trader is to be looking at momentum conditions and the structure of the market. And the structure of the market in here is positive, and momentum conditions are positive. You can see that where the slim ribbon PO is green and gives you a positive signal right over here. Actually, the dip wasn't quite sharp enough to the downside to give you that positive signal, but it just shows you the strength. And when we look at configuration or translation, and you can learn those in the glossary in our cycle analysis workshop, take a look at that workshop. The informational video that you see in there is very interesting. If you go to our workshop tab at AskSlim.com. So here we have a 14-day low. You can see, so these are these minor cycles in here. Actually, they seem to be shortening up a little bit. We have them at 15 days, but the average may be closer to 14 days in here. So we might shorten this up because it was a little early. And that's the flexible nature of cycle analysis. So here we are, first day rising in here. And this green dotted line up there is pointing up to a weekly 61.8% fib extension. That comes in at about 43.75. This level right over here is at about 43.63, which we have basically gotten up to just now. Our original analysis suggested the market would only get up to equaling the highs and be hitting resistances up about between 4,300 and 43.25. The market has proven to be much stronger, and that's why this upper channel was constructed in there as it's heading towards those numbers. Now, if I look up over here, you can see the next weekly extension level, which is way up there at 44.62, approximately. If it were to get above this level at 43.75, then that would be the next level that would be positive. Now, this is what's really important, is that minor low establishes a level that is very that bears close watching. And I'm going to take a look in here a little closer, and you can see that level right over there, 42.8937, where that low is, were the market to reverse and then get under that level, it would be suggestive that the intermediate correction is on. That's why that is such an important level. For the moment, all the conditions are suggestive that the correction is not ready to start, because we have positive momentum, positive configurations going on in here, and to me that's all very clear. That will begin to change underneath that level that we look at right over there. So important information as I share that with you. We are in this minor rising phase out over here. It's suggestive of several more days to the upside, and we'll see if it can continue. Keep your eye on 42.8937, which is a long way down right now. It's amazing, this big reversal as the buy to dippers came back in again. Let's just take a look at the NASDAQ also, and you'll see a similar situation. These vertical lines that you see, those dashed vertical lines, are actually where those lows came in. And here is your minor low, which comes right over here. And again, that's a bit early, so that this needs to be slightly reduced as the market tells us so. And we had this abandoned baby. It's a gap up and then a gap down, and now it's up here essentially closing that gap. So the question is that an abandoned baby or not? 14.891 would be a problem based on a true signal coming out of here. But again, what we want to look at in here are the key momentum conditions. What you see in here on the slim ribbon PO is really a ton of strength, because where it gets underneath this level right over here and then comes up, it gives you a buy signal. You see that right at the minor cycle bottom right there. Here, it was so strong it can't even really give those signals. And you see this momentum just as it keeps going to the upside. So this minor cycle low is very important, and that is 14.551.76. Right now, it projects to be able to rally up to a higher high, which is at about 15,000, right up to there at the top of that fib extension that you see there. So the question is, will it get to 15,000 first? And if it gets up here, the likelihood is that this is where the bigger corrective period is there. Or if it fails under 14.51.76, that would then mean that the breakdown is there and the intermediate correction is on. Very, very key level when we look at that. So overall, when we look at the stock market right now, momentum strong, cyclical configuration strong. For those of you that are studying cycle analysis, your translations are very strong when we look at that. And all of this says the top is not here yet, but we'll know when it forms. And it's very important to me to put in those key levels, because then we really know. And if it gets below and breaks below there for the S&P 500 or the NASDAQ, that is going to mean that it's very likely the correction is on, and some severe selling will be coming in at that point, because that will align with the corrective time frame that we were looking at for the peak coming late June through early July. Well, we're almost getting to mid-July right now, so as this extends out. The timing is what it is. I just bring you what we see in these patterns, and until the market tells us differently, it's in this rising phase, and then when it tops, I think it will be quite clear when we see that. That is everything I'm going to bring you today. Please go to AskSlim.com, explore that site, and do become a subscriber. If you're just first coming, you can become a free subscriber or level 1 subscriber. And level 1 gets some pretty good information for longer term holders. You got to see that momentum tracker. It's outstanding. Please do subscribe to us on this channel on YouTube. If you're watching it here, click that notification bell. Make sure you give us a thumbs up. Follow us on Twitter, AskSlim. Any questions on our membership, write to our lead administrator, Brian, at AskSlim.com for that information. I want you to be unbelievably careful because it is so crazy out there. And we're always wishing you great trading.